Thanks for coming, everyone. My name is Scott Fitzgerald, and I'm one of Guidewire's analytics product managers with responsibility for our data cooperative efforts. So why don't we go ahead and get started. As a reminder, any future-looking features and functionalities may come up are embedded in this lovely screen of text. Since I know you've all read it in detail and all the side effects, why don't we just get going. So the interesting thing is, as long as I've been in insurance, we've always been talking about the nirvana of profitable growth. That is, how do we grow our premiums while returning a great loss ratio and keeping our customers happy? But the question always is how do you actually do that? And from our perspective, it's really about helping all of you make better decisions with better information across every facet of the insurance lifecycle. So how do you make those better decisions? And to us, it's really about expanding the breadth and the depth of relevant information you use to make those decisions and embedding those into the decision points and the predictive models that you provide your underwriters and your claim adjusters. So why does more data equate to better predictions? So what if I asked you a question about what's the observed probability of a coin flip being heads? I think most of you in the room would probably say 50%. It's actually not right. Because if we only flip a coin once, we can only either get heads or tails. So we can only observe 100% or 0%. And we probably don't want to run our business only looking at that one observation. So built this chart to see what the observed probability is as a function of how many flips we do, right? And then we can kind of run the experiment many times looking out of the x-axis. And what you see, it's not until we get out to maybe 500, 1,000 different flips that we start to see that probability stabilize. It's sort of the same thing with insurance. The more events we observe, like claims, the better our predictions are going to be. More data equals better predictions. So let's do maybe another exercise linked more directly to insurance. Let's say that we can understand and price risk based on whether people are happy or whether they're sad. And let's assume maybe our competitor has a similar capability. In that case, we're both going to win some happy folks, some sad folks, and hopefully we both price the risk appropriately. But what if, just what if, we can take advantage of the fact that we have more data, more detailed data, and can look at something like the color? And if we can do that, and our competitors can't, what does that mean? Right? What it really means is that we can segment that risk better. As a result, we're able to offer a lower price for the less risky customers and a higher price for the riskier customers. So that actually drives two different outcomes. Number one, it allows us to attract less risky customers than our competitor. And then number two, it also allows us to more accurately price that risk. That results in a better outcome for us. Again, more detailed data, more relevant data, better predictions, better outcomes. So that really brings us to how we at Guidewire think that we can help all of you. We believe that we can bring more detailed data together at a lower cost simply because we create the systems that generate that data. And you'll hear us talking more and more and more about how this enables you to turn what has traditionally been a system of record into a system of insight that can actively help you grow profitably. So in part, we're delivering this capability through the pooling and aggregation of data that we're calling the data cooperative. It's really just a term for the overall aggregation of data. So what exactly does that data cooperative enable? By participating in the data cooperative, you've got access to three key product areas. The first are pre-built predictive scores that are available to you that are really predictive models built on really large data sets that work well across multiple companies, multiple geographies, and are pre-validated that you can put into place immediately. Claims benchmarks through our Compare application, which show you how you're doing compared to your peers. And in the future, we will be delivering predictive variables that are additional features that you can put into your own predictive models to give them additional lift and really supercharge them. So let's dig into these in a little bit more detail. So cooperative scores are validated, ready-to-use predictive scores that it can be used to inform and automate key decisions. The predictive and guidance can be embedded directly into your core workflows through our Analytics Manager utility. And I'll show you how that works, make it a little more real a little bit later. As the data cooperative grows, the scores will be updated on a periodic basis, and decision accuracy will continue to improve. Again, more data, we can improve those predictions. So what that means is for these score solutions, you don't need to worry about the data. You don't need to worry about the modeling. You can really focus on your business, the processes, the people, and your growth aspirations. And we're going to be, over time, expanding that library, that catalog of these ready-to-use scores, and that's going to keep on growing. And as a member, you've got access to all that information and can accelerate your time to market with these solutions. Cooperative data also powers our Compare application that allows you to benchmark yourself against peers and compare performance over time across hundreds of different claim scenarios and different metrics to allow you to identify areas that you're doing really well in and areas where you might have some operational improvement opportunities. This allows you to identify, make changes, and monitor the impact on your operation. And so you can start to answer questions of, how am I doing at closing personal auto claims in California and Texas against my peers? And what could I be doing differently? As an added incentive to join the data cooperative, Compare is free of charge for any self-managed or cloud customer. It's available to both parties. So from a participation perspective, we're seeing lots of interest in the data cooperative, especially given how new it is. We currently have 15 on-prem customers contributing data and several more in the process of actively onboarding now. But I think more exciting is as people make their cloud journey, we actually have currently right now an additional 35 cloud customers contracted to participate in the data cooperative. So as soon as we start to see those folks going live, which is going to start to really ramp up over the coming months, we're going to start to see these data volumes increase. Right? And I think interestingly enough is if you take our current 20 billion in DWP that's sort of represented by our current participants, you add the next 55 in, right? That puts us at 75 billion, right? That's actually bigger than the largest insurance company in the United States, right? So that's the power of aggregating data, and that's the sort of signal that you can start to take advantage of in your own operations. So why don't we dive just a little bit deeper into this. So talk a little bit about Compare. The great thing about Compare is it's really easy to implement. It's already cloud native. It works for both on-prem and cloud customers. And it really allows you to monitor key claim metrics and gives you feedback on how you're performing. So I can see a lot of different things about our operation. Right? It connects to your ClaimCenter environment, again, whether you're on-prem or in the cloud. It pulls that data through, and it starts to calculate a lot of different measures, such as indemnity, expense, cycle time, litigation rates, closure rates, right? All the information you really need to run a successful claim operation. It lets you set up and view comparisons of claims and exposures for any line of business over the time period of your choosing. And it provides a lot of different filters to enable you to really dial in on that cohort of analysis that's of interest to you. Compare also optimizes your decision making with, again, the industry context in the form of those data cooperative benchmarks. So once you define the cohort of analysis, you've got the ability, the compare will present you with, here's how your peers are doing on that same cohort of claims. All that's done in a completely secure and anonymous manner. We normalize the benchmarks such that no single dominant insurer, because that's always a question we get, hey, I write 80% of this market, right? We actually calculate the values in a way and normalize it that no single dominant insurer can overwhelm the signal of the benchmarks, and no one can reverse engineer a particular company's numbers. And we can talk more about how that sort of works in detail, but rest assured, our goal is not to disrupt the balance in the market. It's really to make you all do a little bit better. So we demoed Compare at last year's Connections. I've got a bunch of folks downstairs. We can demo it again for you as well. So I thought I'd kind of focus the rest of our time digging a bit deeper into our first predictive score solution, which is around the likelihood of subrogation. So it's been shown by a lot of different studies, a lot of different groups, that increasing subrogation recoveries can be a significant opportunity to drive your loss ratio down. But there's always challenges with subrogation, right? If you've got a limited subrogation staff, maybe you outsource it. And, let's be honest, getting opportunities referred to your subrogation team is often a secondary consideration of your primary adjuster staff. And so as a result, there's also lots of room for improvement in that process. So our first predictive score solution around collision subrogation likelihood can guide adjusters or help you automatically refer likely subrogation opportunities to your team. Based on 1.3 million claims, the model is really designed to run right at first notice of loss, so early on in that process. And we validate it across multiple companies, multiple regions in the United States, and both personal and commercial auto. So continuing with the theme of driving better decisions, having a great prediction is one thing. Actually making a decision on it is totally different. So that's where our Analytics Manager functionality and our ability to embed any predictive model you build or the ones that we build directly into your ClaimCenter workflows. Or if it's an underwriting model, into your Policy Center workflows. I actually had to reset up my demo environment when we released Flen. It took me about 15 minutes with our production Subro score solution. So we can actually get you bolted up and running in 15 minutes in your test environment. You're going to obviously want to go through validation and promotion activities, but you're not looking at a lot of time. You could probably get it done if you're in a hurry in a few days. Probably take you a couple weeks, under normal pace. So those scores not only help increase the subrogation recoveries, but also really improve a lot of the process inefficiencies you have with how do you actually work those claims. And one of the things we did with, Chris and I did with looking at the model was talk through and run sort of a number of different business simulations for, how is this model going to get used? What do we actually think the impact could be on a business? And working through all those different scenarios and that analysis, we kind of came to the conclusion that conservatively we think you can get about 85 basis points of improvement on the collision loss ratio. And if you sort of follow sort of standard premium ratios, that equates to about a 23 basis point improvement on your auto loss ratio. Put another way, if you write a $250 million auto book, we think you can put $575,000 in value back in your pocket. That's pretty powerful for something you can put in play in a couple weeks. All right. So with that, I'm going to switch over to my laptop here and give you a demo of essentially how we implement that kind of out of the box. And then I'm going to take you through our Analytic Manager functionality so that then you can see exactly how you can configure this to meet your exact needs and how easy it actually is. So what I have here is I've logged in as a claim adjuster. I've got a new claim, right, that has popped up on our screen with our insured Jill Smith, with the first activity. Hey, make some contact with the insured. So I want to go ahead and review the claim and first log back in. So review the claim. Come on. All right, get a sense for what's going on before I make contact with the insured. Okay, so rear-ended at a stoplight. I got my collision exposure already open. Maybe want to take a look at the details. Looks like it was foggy weather. Happened in California. Our insured drives a relatively expensive vehicle. So with that, before I make contact, I might want to look at our analytics summary here. So demo system, I've got a couple different models running, scores running. But if we focus here on our top line, we can see that subrogation scores have fired, right? And it's come to the conclusion that this claim is in the highest 10% of all exposures in terms of being able to have a recovery on it. And so we should go ahead and refer it to subrogation. You know, one of our beliefs is we really don't want these scores or models to be a black box. We really want folks to understand what's going into those models, what's not in those models, and how do you really blend your underwriter or adjuster expertise with the model. And so with that, we can actually show the predictive factors that are driving the model score, what's really influencing how we're coming up with that prediction, so it's not a mystery. So, of course, our adjuster goes on, so they start to work this claim. They're probably still working the other 130 claims or so that they've got on their desk as well, and they might get distracted. They actually don't make that referral. But during the course of working this claim, they actually update the fault rating. They get the police report back. They have that conversation with the insured. So let's go ahead and update the fault rating. At this point, we actually automatically fire that referral. But the idea is that you can use these predictive scores to drive automatic activity. What you can see is because I updated that fault rating and it was a high likelihood, we don't want to leave it up to the adjuster to make that referral. We fired the automatic rule to actually go ahead and send that over to the subrogation team. And if we go down and we take a look at the subrogation screen, what you can see here is we've actually put that priority right there for them to look at. Because one of the interesting things about this predictive score solution is that it does a really nice job of finding claims that are up to 3 times more likely to have subrogation recovery on them. But it also does a really nice job of telling you what claims have almost no chance of having recovery. So those are claims that effectively your team ought to be ignoring, even if they do come in as a referral. So that information is right here on the screens that your subrogation folks are already looking at. You can see that we've updated, that referral date. It's been automatically referred. And of course, the subrogation folks have access to go look at the same details a couple clicks away there. Again, so they understand what's driving that referral. So that's really sort of out of the box how the scores work and how they're configured. Your workflows may be slightly different. You may want to change the thresholds for when we fire the rules. So with that, I'd like to actually go ahead and show you how we actually configure these solutions with our Analytics Manager utility such that you can put them in place quickly. So with that, I've got to log in as a super user and go to our Administration tab, Analytics Manager. We've got a lot of different solutions running, so let's filter it down. And here's the one that we actually have running with the pre-built predictive scores. So we go ahead and take a look at this. Right, we can actually edit it here. The great thing is that if you adopt this solution, we give you the scores. We also give you the template that everything I show here actually auto-loads with that template. So it's an XML template that comes in the Analytics Manager. So you can think about it just like for Policy Center, APD, just like our Go templates. It gives you that head start. And then you can think about how do I need to potentially deviate from that a little bit. So Analytics Manager is really a low-code, no-code environment for you to use to deploy any model out of Predict and implement it directly in the Policy Center or ClaimCenter quickly. So the first tab here is we got to give it the endpoint of the scoring solution and the credentials that we provide to you. That scoring endpoint, that model is already running. Then what we have to do is we have to think about, hey, the model is going to require some input variables. We need to make sure that we're sourcing those data elements from where they live in your system. We've mapped them to where they live out of the box, But you may have taken something like loss cause and moved it off the claim level down to the exposure level, and we're going to need to write a little bit of GoSu to tell the solution where to actually go find that data element. So there's potentially a little bit of work there, not a lot. Again, we've already loaded all the fields we expect, so it's really just a matter of validating your particular implementation. Where are we getting that data from? I think more interesting is really the applicability. Where and when do you want this score solution to run, right? What loss types do I want to work for? I can also add policy types, right? Maybe I don't want to use it for commercial auto, or maybe I only want to use it for commercial auto, right? What jurisdictions? I actually want to try this out maybe just in Texas to start, and then I'll expand to Oklahoma or vice versa. That's all point and click away. Then we can talk about appearance, right? So this is what do we actually show in those analytic summary screens, right? We want to show your folks the right information that's relevant to them without overwhelming them. And so those choices on what that means for your organization are all here. And so I can take something like turn off those influence factors. I don't recommend this, but it's easiest to show here. I can save this solution, right? And if I actually go back into that claim now, and I go take a look at that analytics screen, and I go look at the score, and it's refiring. Uh-oh. Looks like the scoring service went down. Fun. It'll actually pull that right off the screen, right? We don't actually have to restart ClaimCenter to do that. And so you can make the changes on the fly, and then see those reflected in the solution. So let's go back in here and see what else you can do, right? So we've got the opportunity to set custom thresholds for those high, medium, low, the red, yellow, green actions, the specific recommendations that you want to see shown on the screen. So you can determine what those thresholds are, and you can determine what those actions are here. So that's easy enough. And then we've got some general settings and monitoring capabilities that apply as far as how do we call the scoring service, what's been the performance of it. We can see what claims have actually gone through that scoring service, so you can get a sense for, who's been, what claims have actually been scored. And then certainly we've got some validation utilities that allow you to, as you're setting it up, validate that you're getting a correct response back from the scoring service. Likewise, from an automation perspective, we've got the ability to use those scores in those activity rules. So this is the rule we use to automatically fire off that activity that makes that referral to the subrogation team. And here, there's really just a couple things we need to do. So the first thing we need to do is define a variable that actually gets that particular score. So in Analytics Manager, if we go back to the score solution, there's a unique ID to that particular solution. We grab that and put it here, so now the rules know how to grab that information. Then it's a matter of just writing a rule, like you're used to doing in ClaimCenter. Except now we can actually start to fire those rules based on the value of the scoring solution, or the priority, or any of the other fields that come back once that score has fired. So maybe you want to drive all your activity based on the red, yellow, green. Maybe you want to drive it based on the 8 tiers. Maybe you actually want to drive it based on the more detailed score. All that's available to you to include in the criteria for the rules. And then it's a matter of defining any other rule like you would. Hey, go ahead and generate that activity, make that referral. Let's update some data so that we know what's going on. Publish that, you're off and running, just like you would with any other activity rule. So that's how easy it is to implement any predictive score solution within either ClaimCenter or PolicyCenter. And that's really kind of all there is to it. So with that, we'll kind of go back to the slides here, if we don't mind, and talk a little bit about where we're going in the future. So it's really our intention to use the power of the data cooperative to build a number of additional of these predictive score solutions to really get coverage across the insurance lifecycle. We'll be focusing more on starting on the claim side, because that's where the bulk of our data is now. But we'll be expanding to the underwriting side over time. Now, it's going to take us a while to get through this. As you can only imagine, wrangling data for one company is fun. Wrangling data for, what could be 500 companies is a whole nother level of effort. But that's what we're really committed to, because we believe that we can bring you additional value through those activities. So that's really all I had for today. So with that, I'm happy to take questions from anyone in the group on anything we've covered here.
For the industry benchmarks that you talked about, given that you have at the moment 15 carriers who are opted in, how do you account for like regionalization? There are trends. You cannot do a nationwide average on things, right? You have to take into account whether they are in the northeast, southeast, things like that.
Yeah, absolutely. So the compare application really allows you to define a cohort of analysis that really can allow you to focus and control for those variables. So one way it does that is through the ability to filter down to, say, a certain state or a group of states. And so there's a whole number of filters that are available in that compare tool. And then maybe we can just pop back to the laptop. I can actually, we'll be brave, right? And we'll see if I can get compare to load. Uh-oh, now I got to go through the login. But it allows you to do that and really filter down to that cohort of analysis. And I think the interesting thing is that the benchmarks are not pre-calculated, because we have so many different ways that you could drive the filtering behavior within compare that we actually calculate the benchmarks on the fly for specifically that cohort of analysis that you define for whatever particular analysis you want to run. Right. So to give you a sense of that, let's come in here. We'll open up an existing scenario. Let's do personal auto BI. Should be preloaded here. So you've got the ability to come in here, right, as you define it, and you can set, hey, what's the line of business? What's the specific coverage I want? What's the specific, country or state and province I want? You can define those time frames, either custom, month to date, year to date, that sort of thing as well. And likewise, there's a whole number of other fields that you can start to filter on, including the perspective date, right? So that's really an important thing to think about in terms of comparisons within claims, because claims develop over time, right? So if you're looking at open claims, when do you want to value them? And if you're doing a year-over-year analysis, sometimes you want to see that claims development. Other times you don't, right? And I actually want to see, hey, I want to compare 2 years, but let's value them at the end of the year. So a metric like a closure rate is a valid year-over-year comparison. So you've got that ability because we take in the incrementals every night. So does that help answer the question?
So when you do, let's say you went down to a state level, and if there is only like one other company that's contributing, then you're not really anonymizing at that point, right? You can always guess it.
Correct. So actually what happens is when we do that, and I don't know, I could probably go, actually I'm not going to do it because we calculate the benchmarks on the fly. It takes a while to calculate. But what you'll start to see as we expand sort of the metrics here, you'll start to see NAs start to show up. So if we don't have enough claims or enough data for a particular metric, or even just to drive the benchmarks for the whole column, because we've hit, a category, we've gotten into, glass claims in North Dakota, and there's just no volume there to calculate that, we'll actually start to show NAs. And again, it's really to protect your own data. We don't want anybody to drive into a corner of the market and be able to get a sense for, hey, I know who's here. Now I can sort of get a sense for what my competitor is doing, right? It's really, again, so we've got a lot of steps in the tool to prevent that kind of behavior, because that's not the intent, right? The intent is to show you, where are you doing well? Where is your opportunity as compared to sort of what a larger audience of participants is doing, not to say, hey, I want to know what, competitor B is doing. Go ahead.
Thank you. I do have a couple questions. One, this is more for you to comment, but Gartner's Data and Analytics in its most recent conference in September mentioned that they're moving away from big data to what they call small but wide data. So with that in mind, could you comment on what would be a point of diminishing returns in terms of how much data do you really need to, from a data share perspective, to actually make sure it's relevant? Have you considered?
Yeah, so I don't think we're there yet, that's for sure. I think having an understanding of how the industry is behaving overall is valuable, and you hit that when you get a good chunk of the industry. Certainly, I think there's a tipping point where there are diminishing returns in terms of additional volume, but you do need, again, that broader baseline of depth of observations really can help in the predictive modeling exercise. And I wasn't at the conference, but when we think about big data, right, we think about people have traditionally created these big data swamps, right? Just pile everything in there and don't make any sense of it. Everybody will be able to take out what they want, right? And that's, I think we've learned that that's really hard to navigate. And so really our philosophy, and this is around our scores, our benchmarks, those upcoming predictive variables, and that's sort of why I put the emphasis, I don't know if you caught it, on relevant data, right? It's really about us understanding the insurance industry. It's about the fact that I was a claim adjuster. I started out at Liberty Mutual. I was a claim adjuster. I underwrote small commercial. I've run claim systems for a couple of different companies, right? We sat in your shoes. We apply that expertise to help curate that because I don't want you wandering around in a data swamp, right? But we do want to bring, right, and this is why the Hazard Hub acquisition really does great things. We do want to bring that width, right? What other interesting factors and information can we bring to help you make those better decisions? And so it's really about helping you curate that and implement analytics and data in a way that's really consumable so that you don't have to ford through the swamp yourself. Let us help figure that out. Let's do that once on all of your behalf, save you that trouble. That's really sort of the philosophy we're running at. Does that help answer the question?
Yes, absolutely. In terms of a participating provider, and many of us house a ton of legacy data, going back to when companies were formed or past acquisitions and so on. How many years or of historical data do you see as a participating carrier bringing? Is it all the data that they can expose, or?
Yeah, so we'll typically have a conversation. So we'll pull the whole history that you have in your ClaimCenter database, right? We will look for migrated flags because we know that a lot of you have, you've got on the ClaimCenter at some point in time, right? So what data did you pull through from, that system that you fired up in 1974? And then you pulled that data in the claim system. That data usually has a pretty low quality, so we'll usually flag it and then not bring it into this particular tool. But we will bring that history in. And so that means the day one you're out of the box, you can start looking at trends back a couple of years. Typically folks don't want to go back, 7 or 8 years. But we will have that data there and available for you in case you do need to do that for some historical reason. But we definitely have a conversation around, what's your data quality look like, back a few years, and are there sort of precipitating events that say we need to ignore data, from this point on, or with this flag, or that sort of a thing, because we do know that there are challenges with that legacy data.
Thank you. And another follow-up, what amount of metadata about the carrier would you expose through this? And what I mean is, this is, this data comes from participating provider in this state for this type of claims or so on. Is that exposed, or they're all normalized?
So you really get that in two ways. And one is as we calculate the benchmarks, we tell you the number of carriers that are in that cohort of analysis. So again, you could drive into a state and that number could go from 9, and if I looked at Alabama, it might go down to, 4. So that's one. And then the other is sort of that slide that I showed halfway through the presentation that gave you kind of the makeup of who's in the data cooperative. So, we don't share names, but we definitely share a profile. Here's how many sort of tier ones there are. Here's sort of the lines of business, right? We try to give you sort of a sense for that participation, the profile of participants, such that you can have, a rough sense of, what are you looking at. And then interestingly enough is we can actually establish new benchmark groups as we go. So if we get a whole collection of non-standard auto carriers that start to participate, we can open up a non-standard auto benchmark group. So now you can say, hey, I want to benchmark against all US companies, or all standard US auto companies, or all non-standard, right? And so as the cooperative grows, we'll have that ability to create new and interesting benchmark groups, really based on who's participating and the interest level of driving into some of those segments.
Okay. Thank you.
Excellent.
So
Anyone
I had a
else?
question more around the analytics side rather than the cooperative. So if I've built my own models outside, can I leverage some of the tooling that you just talked through there to implement and build out the models? Or does that only work on ones built within your
No,
components?
absolutely. So definitely want to talk to our Predict guys about all of that in detail. But essentially with Predict, you can use Predict to build your own model. You can also build your models in R or Python and use our bring your own model functionality to bring those into Predict for deploying the scoring endpoint. Any model, whether we build it custom for you, whether you build it in Predict or bring your own model, or whether it's one of our predictive score solutions, how we implement analytics in PolicyCenter and ClaimCenter is through that analytics manager tool that I walked you through. So any of your own models, you would actually deploy with Predict, and then you would basically put it in the same way I walked you through. Obviously, the input variables would be specific to your model. You'd have to have that understanding. But it's the same low-code, no-code process.
Thank you.
Is it only designed in considering United States, or you're planning for any Europe or this product in general? Because considering GDPR and where is your data center located, kind of.
Absolutely, no, great question. So right now, the data does come back to the United States. We're in the process of, obviously as we have more go-lives worldwide, we're in the process of looking at what it's going to take to basically stand up regional versions of the cooperative and then the compare tooling, just so that we can avoid the GDPR implications of that. Certainly, the interesting thing now is those compare benchmarks, we actually pull almost no PII through. And so, if you think about it, right, once I aggregate data up, knowing that it was Sally versus Joe versus, Sahid or whatever, that information drops out naturally anyway. So we just don't collect it because we really don't need it for the purposes that we're doing, right? We need the individual record, but we don't need the personal details, because whether we're building a model or we are building a benchmark, we're really looking at, lots and lots of records in aggregate.
Hi, is this service free of cost for the participating members?
So the compare tool is, so anybody who wants to get compare, that's absolutely free of charge, just a matter of contacting your account representative, and we'll get you on the list and get you in the process of implementing. The predictive score solutions do have a charge, and again, your account rep can walk you through that. All right, excellent. Well, I appreciate it very much. Thank you so much. And if you have any other questions, come talk to me after, or anyone down in the exhibit hall. Thank you.